It's the week ahead at XM.com. Thanks for joining us. I'm Christina Marucos. With me is our senior market analyst, Rafi Boyajian. Rafi, the U.S. government shutdown has probably been the biggest market-moving event of the week, and its ripple effects are likely to carry into the upcoming week as well. We saw the dollar take a hit, we saw gold hit a new record high, and yet stocks also made new record highs. So what should investors anticipate next?
Indeed, Christina, it's been quite a week. Of course, a lot of headlines about the government shutdown, which, the scary thing there is that the Democrats and Republicans are no closer to reaching some kind of a stopgap funding bill on a deal for that. And what's strange is that we've seen stock markets, as you said, reaching record highs, but yet markets are also registering the heightened uncertainty. That's why gold has been rallying as well. The dollar has come under pressure, but not as much as one would have expected. But most importantly, what the shutdown has done is that it's derailed the release schedule of official government economic data for the US. Hence, the non-farm payrolls report has been delayed. Potentially, though, we might get it next Friday if there's possibly a deal in Congress early on in the week. Other than that, though, it's likely to get delayed again. And should we get the jobs report, though, I think the risks are tilted slightly to the downside, following, of course, the negative reading we got in the ADP employment survey. So I think markets are kind of now tilting to somewhat more rate cuts than less rate cuts. 2 rate cuts for the rest of 2025 is almost fully priced in. But even if we don't get the data, but we get signs that this shutdown is going to last for quite some time, I think that's also going to bolster Fed rate cut bets, because the longer the shutdown lasts, the more negative impact it's likely to have on the economy, both in terms of no government output in terms of those agencies that have been shut, but also the temporary layoffs of federal workers as well.
There's a lot of strings attached to how the government shutdown will play out, so we'll be on top of that story. We'll look at Fed rate cut expectations in a bit, but it also looks like it's going to be a very busy weekend. Apart from the Japanese elections, we also have an OPEC Plus alliance meeting. Let's start with that regarding the weekend events. There is quite a bit of uncertainty as the alliance wants to increase output, so how could that affect oil prices?
So yes, it's that time of the month. We're going to have the next monthly OPEC meeting. So usually these are online meetings, and it's mainly decided by the bigger OPEC members. Now, there were reports earlier in the week that potentially they're looking to increase output by 500,000 barrels a day, and that did send oil prices sliding in futures markets, but then this was dismissed by OPEC, and we're getting some new reports suggesting that they're going to be discussing an output hike of between 274,000 and 411,000 barrels per day for the month of November. Now, should we end up with something on the higher end of that range, potentially that's going to be more negative for oil prices than should we get something at the lower end of that range. On the whole, though, I think any reaction in oil futures is going to be a knee-jerk reaction on the whole. It looks like OPEC is committed to normalizing output, and those concerns of oversupply are unlikely to go away anytime soon.
Now, the yen has been gaining on the back of a weaker dollar, but how could the outcome of the elections on Sunday affect its current trajectory?
So it's interesting that the yen actually was having a pretty good week until we start getting some mixed signals from Governor Ueda, or from the Bank of Japan, because we had the summary of the BOJ's previous meeting, which suggested that policymakers were closer to hiking rates. A lot of concerns that, the potential problems created should they delay a rate hike any further. But now we're hearing from Ueda saying that, the risk of the Bank of Japan being behind the curve is actually behind the inflation curve specifically, is rather low. So we've seen rate hike bets being pared back a little bit. But either way, I don't think the BOJ is going to be deciding their next move until we get the outcome of the LDP election contest. Of course, Japan's Prime Minister Ishiba resigned, paving the way for fresh leadership elections within the LDP party. The front runners at the moment, from what we know, is Sane Takaichi and Shinjiro Koizumi. So Takaichi is basically a bit of, not very supportive of the BOJ's normalization policy, but at the same time, she wants more fiscal stimulus to boost Japan's economy. Now, given the concerns we have about debt, and this is, of course, a problem for many other countries as well, I think a big fiscal stimulus package probably isn't going to be very positive for the yen, even though it might be positive for growth. Now, for Koizumi, I think he's more disciplined politician. He's unlikely to stand in the way of the BOJ hiking interest rates, and also he's unlikely to go for a major fiscal package. So I think the yen is more likely to favor Koizumi, but let's wait and see what the outcome of that election is going to be.
It sounds like a very important election in regards of monetary policy, and not only that. Now, let's circle back to Fed rate cut expectations, and turning to the economic schedule, we'll be getting the Fed minutes on Wednesday. Investors currently consider an October rate cut a done deal, but could the minutes change that expectation?
Yes, so as you said, October rate cut is now a bit more of a done deal after that ADP jobs numbers. I don't think the minutes are going to change that. I think what might be important from the minutes is that should we see the full scale of divisions within the FOMC in terms of the hawks favoring continued caution in terms of cutting rates, whereas the doves, of course, the ultra dove newly appointed governor Stephen Myron voted for a 50 basis point cut at the last meeting. I think that might create a little bit of uncertainty about Fed policy, that potentially at the upcoming meetings we're going to see more split votes, and that tends to be somewhat negative for the dollar, and it does contribute to risk aversion. But on the whole, I don't think the minutes are going to change a great deal.
And speaking of minutes, the ECB minutes will also be released this week. And although Lagarde gave the impression that the easing cycle of the ECB is done for now, could the minutes reveal anything market moving?
So again, I think we've heard from quite a few ECB makers already, and of course, following that ever so slightly stronger than expected CPI numbers, it's unlikely the ECB is going to be cutting rates anytime soon. So it looks like they're going to stay on hold for the next few meetings. Even though they did say that December, they're going to be discussing whether more cuts will be needed. But I think if the ECB minutes are going to have any impact, it might be, say, for example, we see that quite a significant number of governing council members are concerned that maybe not now, but in the future, inflation might surprise to the downside, so that increases the likelihood of rate cuts at some point in 2026, which might weigh on the euro a little bit, but I don't think it's going to affect near-term rate cut expectations at all.
We also have one central bank meeting on the upcoming week's agenda. The RBNZ is expected to cut rates, so the question is, by how much are they likely to cut?
Indeed. So the RBNZ is getting to cut interest rates again. We had a pretty poor GDP reading for the second quarter, and overall, the New Zealand economy has been struggling since late 2022. There's a little bit of concern about sticky inflation. In the previous quarter, we did see inflation heading higher to 2.7%, but I think now it's almost certain they're going to be cutting rates. The question is by how much? I think, there's a good chance we might get 50 basis point cut, but of course there's another meeting coming up in November. They might decide maybe to go 25 and 25 rather than 50 basis point in one go, just in case we get some improvement in the coming weeks. But on the whole, I think this has been quite negative for the Kiwi because it really basically just as when other central banks are starting to end their easing cycle, it looks like the RBNZ will be potentially carrying out a few more cuts until they can say they're done.
And finally, Rafi, let's look at the Loonie. It's been underperforming lately on soft data and falling oil prices. Could we see it get a boost this week from the Canadian employment numbers?
It might get a boost, but also it could go the other way as well. The last two jobs reports were pretty bad, and that's why the Bank of Canada resumed cutting rates, and they may possibly cut rates again at their next meeting. But markets see basically the likelihood of this as a coin toss. So data could sway things either way. Of course, we're going to get some other data until the next meeting, but potentially another jobs report could seal the deal for a rate cut by the BOC later in October.
Rafi, thanks so much. This was the week ahead here at xm.com.